All right. Good morning. Good morning. Glad you were able to join us this morning for our home buying success webinar. Wanted to kick it off by just talking about the purpose of this presentation. So I want to empower each of you to make informed decisions, to look at everything strategically and have a plan, but more importantly, to walk you through some of the most important steps that it's going to take on your home buying journey. Whether you're a first-time home buyer or you've purchased property before, you know that each home is a little bit different and there's a little bit of a different strategy that we employ. So let's go ahead and get started and walk through some of these things together. So buying real estate is a huge, huge financial decision for anyone, whether you are a first-time home buyer or a seasoned home buyer. What we're going to do this morning is walk through 10 steps that I believe are going to put you in the best position to be able to be as successful as possible. So those 10 things that we're going to walk through are talking about before you begin talking with a lender, establishing that price range, researching the location, the communities, finding an amazing buyer's agent who's going to be your advocate, viewing homes, writing that offer, and then what happens after you're under contract, talking about appraisal contingencies, home buying contingencies, approval contingencies, all of those things. Walk through a little bit about repairs possibly that might come up during inspections. And then finally, after it's all said and done, what does the close look like? What happens next? So let's talk about before you begin. One of the things that you want to understand is what your options are. So if this is your first home where you're ready to start building equity, have you outgrown your current home? Do you need more space? There's a lot of reasons that might be driving your purchase. So what is it that you are looking to do? We always start with first making a list. So that list is going to be your needs, your wants, and your desires, right? So if you are somebody that loves to cook and make gourmet meals, obviously a chef's kitchen or a really nice kitchen is going to probably be closer to the top of that list. If you are somebody that has a lot of shoes, a lot of dresses, a lot of dress pants, dress shirts, suits, you need to have a big closet. So those are the things that you have to write down. I'm going to call those your non-negotiables. You also have to think about the neighborhood that you want to be in. Do you want to be close to your favorite restaurants? Do you want to be close to the school that your children are going to go to? A lot of those things are going to come into play. So before you go out and start looking, make that list so that you know exactly what you're looking for. And then once you know what you're looking for, the next step is to chat with a mortgage lender. So this can be somebody like myself that's a mortgage broker that represents hundreds of lenders. It could be your local bank. It could be a direct mortgage lender, but you're going to want to have a conversation with them so that you can understand what your buying power looks like, to understand if you're even able to get an approval at this point. Maybe there's some credit challenges. Maybe we have to talk through how you earn your income and how that's documented. There's a lot of variables that go into play. So the very next step after making your list is talking to a lender, getting some information, walking through the plan, and then understanding what your buying power looks like. And it's important that you disclose all of your debt, even if it seems like it's off the credit radar. So as a mortgage broker, I can tell you that there are many times that I have to uncover additional things that maybe aren't first introduced because you're not thinking about it. So make sure that you are being fully transparent. And I hate to say, but sometimes when you're going through this process, you're going to need to just open up and give everything that needs to be given. It's up to your mortgage broker as a seasoned professional to determine what you're sharing with them, if that's going to be passed on to the underwriter, to the person making the approval decisions. But give us all the information that we need in order to get you there. So once you go into an approval period prior to contract, I like to call that the freeze time, because I don't want to get you pre-approved and then put something in place that's going to prevent you from being able to get approved. So we provide a list, but here's a short list of some things that you should avoid. I call them landmines that might blow up your mortgage process. That's applying for new credit cards, new car loans, even having credit inquiries. Don't pay off credit card balances. Don't close any of your credit cards. Don't max out your credit cards. Don't pay off any collections or charge offs, and don't change jobs. So again, this is after the pre-approval. Prior to pre-approval, some of these things might be a conversation that you and your mortgage person are going to have because we're getting you approval ready. Once we get into the pre-approval, that's when everything kind of becomes a soft freeze. After you go under contract, that is going to be a hard freeze. 100% can't do these things, could mess up the deal. And we don't want to mess up the deal for you. So after you've been pre-approved, you figured out what you're looking for, you have your needs list, you have your wants list. Now you're going to set up a price range. You're going to say, this is how much I can borrow. This is what I'm approved for. Now, that price range might be well above your comfort level. That's okay. Nobody's saying that you have to max out your approval range. But if you're looking to buy something in the 350, 400 range, and you're only approved for 250, 300, you might need to hone in exactly what you're looking to do. And your mortgage lender will walk through the rationale and the reasons behind where you are capped out. Now, let's say you're still looking in that 350 to 4 range, but you're approved up to 5. That's great for you. That means that you're purchasing under your approved budget. Again, nobody's saying that you have to max that out, but at least it gives you an idea of what you can afford and what you can do. So now let's talk a little bit about researching those locations and those communities. Some of those things that are going to come into play, again, are going to be the schools, the rankings of those schools. You might be interested to know what the crime rates are in certain areas. You might be looking for something that's close to your favorite shopping, your favorite dining, or maybe you're a theater and arts person and you're a fan of the arts. You need to be able to be close to those things. Maybe you want to live in a downtown area because you want to be within walking distance to things. Maybe you want to live in the suburbs because you want to be able to go into the downtown area, but you don't want that to be your home base. So that becomes the next thing that you start looking at. We've made your list of needs and wants. We've talked to a mortgage lender. We've gotten you pre-approved. Now you're looking for the areas that you want to be in. What happens next? Well, you've got to get connected with a good real estate agent, a good buyer's agent. That buyer's agent is going to be your advocate in the home buying process. You're going to communicate to them everything that you've gone through in terms of the mortgage process and your needs list and your desirable areas and locations. And then they are going to put on their sheets everything that meets those criteria for you. So they're going to say you need these bedrooms, this bathrooms, this area, proximity to this, specialties for this, close to dining. They're going to go through and find those for you. And then they're going to show you those properties. They're going to talk through a strategy with you on how to go about possibly making an offer on those properties. So those are things that real estate agents excel at. If you don't have a real estate agent that you're already connected to, we'll be happy to introduce you to some of the best that we work with. So you found your real estate agent. They're doing a bang up job showing you what's available, getting everything on your checklist identified. Now, let's talk about what it looks like when you're viewing the homes and writing those offers. We like to partner with our real estate agents so that we're able to be a team on these things. Everything about buying a home is a partnership. There's a partnership between you as the home buyer, us and the lender, and of course, your real estate agent. So here are some critical things to think about when you're looking at making those offers. And of course, the real estate agents are the experts at these things. But the road noise, the traffic, the neighborhood amenities, homeowners associations, costs, services, property taxes, special assessments, schools, crime stats. We've talked about some of these things. These are the things that you're going to want to make sure that you have discussions with your real estate agent about. The next thing up, okay, now you're under contract. You found that perfect home. You can't live without it. With the help of your real estate agent, you negotiated great terms, great price. Now, what happens after that? Well, the first thing that happens after you go under contract is typically making what's called an earnest money or an escrow deposit on the property. So that is your good faith deposit that you're going to move forward with the contract on the property. The amount of that is going to be different depending on who the agent is, what they've negotiated, how those things work. But that's an amount that you'll be sending over to either the title company, escrow company, title attorney, that they will hold in an escrow account. And that amount of money, whatever it might be, is applied toward your down payment and or closing costs on the day of settlement. So let's talk about a couple of contingencies. When you go under contract, one of those things could be a home inspection contingency. So a home inspection protects you because that home inspector is going to be looking for things that are wrong and or right with that home. So they might be pointing out to you some defects in workmanship. They might be pointing out to you some concerns that are light, general. They might be pointing out concerns that are more deficient. They might be hard stops. There's different things that might come up during that home inspection. So that's a contingency typically on the contract. If you are getting a VA loan, or if the home that you're buying, say, is frame, meaning it's wood built, stick built, it's not concrete block or a different type of construction, maybe you need a termite inspection. It's not typical on a VA loan, it's a requirement, but usually you don't have a termite inspection, but it might be something you want to look into depending on the structure of the home, where the home is located, and things like that. The next contingency is going to be a home appraisal. So that's different than a home inspection because the home inspection is going to determine the soundness, workmanship, and quality of that home. The home appraisal is going to determine what the property value is. Okay. So if you're going under contract to buy a home that's, say, $350,000, the lender is going to want to make sure that that home is worth $350,000. If the property appraises over that purchase price, that's great news for you. It doesn't change the terms of your agreement to purchase the home, but it does mean walking into that home, you have a little bit of equity, which is always a bonus for you. Now, on the other side, let's say that you're buying it at $350,000 and it appraises for $345,000. That means that the appraiser is saying that that home is possibly selling for $5,000 more than what it's worth. In that scenario, there's a couple of different strategies that come into play. You, as the home buyer, could potentially cover that additional $5,000. You could work it out with the seller where they reduce the price of the home by that $5,000, or they could also find maybe a happy medium where you split the $5,000, $2,500 apiece, or any other variable. But what's important to understand is if you're under contract to purchase a home for a particular price and it under appraises, you're going to want to talk to your real estate agent to find out what those options are. Don't make any assumptions. Talk with them. That's what they're there for. They're experts at being able to negotiate that. Next, we're talking about a mortgage approval contingency. So when you go through your mortgage approval, there's several different steps and milestones along the way. One of those is what's called a conditional loan approval, which means that your loan is approved if the following conditions are met and satisfied. Typically, that's going to include getting the appraisal back satisfactorily. It's going to include getting clear title, which we're going to talk about here in a moment. It's going to talk about you getting that homeowner's insurance, which we're going to talk about here in a moment. And it could be some other things that we need to get from you as the home buyer. Maybe we need clarification about income. Maybe we need clarification about a large deposit or a large withdrawal. So there's many different things that might come into place, but mortgage approval is another contingency along the way. Okay, next we're looking at clear title. So title to the property means that you own that property legally and free of any liens or anyone else making claim to that property. So you can see I have in parentheses here, seller must have legal right to sell. That means that they can legally sell that property and there's no hindrances available. Meaning, if they sell that property, no other company, entity, or any enterprise can come in and say, that's my property, or I'm owed money for this or for that. Those things are called clear title. So once you have a clear title, then the seller can convey property or transfer ownership of that property to you. Next, we're talking about insurability. That is going to be the ability to get reasonable home insurance. Most homes are insurable. You're going to have some properties because of workmanship issues, because of major defects that are not insurable. Some examples of uninsurable properties might be if there's significant issues with the roof, if there's significant issues with the structure, or it could be any other variable. I'm not an insurance agent, so I don't know all the ins and the outs, but you should talk with one if you have any questions about insurability. And then finally, the last thing that we look at in terms of contingencies, and certainly not the only, this is not an exhaustive list, as I would say, but it's some of the things that you might look at, is going to be the HOA, or Homeowners Association review. So some of the things that you might look at include CC&R, that means covenants, conditions and restrictions, and financial reports. So some of the covenants, conditions, and restrictions might mean that you can't have certain types of things in your backyard and your front yard. You might have to get authority from the homeowners association to paint your home a certain color, to change the construction of the home, to add sheds, to add pools. It could be anything like that. There's also some restrictions about who can be in the community, where you can park, what type of vehicles you can have in the community, all of those things. And then there could be other restrictions in terms of when you're permitted to have guests, all different types of things. So that's the final contingency, being approved possibly by the HOA, or you approving to live in the HOA because it fits your lifestyle. So definitely not an exhaustive list, but here is some common contingencies that you might look at. So let's say that you have that home repair done and there are some concerns that come up. The seller gets their repair request. They can decide that they're going to agree with the repairs. They can refuse some or all of the repairs, or they could make an offer to give you a discount or a seller concession or reduce the price in lieu of doing those repairs. These are things that you're going to want to talk with your home party. You're going to want to talk with your real estate agent about, because this is where they come in, that they're experts in the negotiations of these home repairs and things that might come up. Okay. So you're going to want to talk with them if these things come up. Likely they're going to be leading the conversation with you because they're involved in they're involved with the inspection period as well. So if you have any questions about those things, you want to lean on your real estate agent. So here's a nice quote that I like to share from Ralph Waldo Emerson. A house is made of bricks and beams. A home is made of hopes and dreams. And that's actually what we call our initial conversation that we have with you as your mortgage lender. We call it your hopes and dreams call, because we're very interested in learning more about what you want to do and how you want to structure your home mortgage. There's so many different variables, and we can definitely dive into that when we get a conversation started. So now you're under contract. You've gone through the contingency periods. You've gotten through the repairs. Now you are cleared to close on your home, and you go into what the closing is. So here's what the closing looks like. I know it can look like an exhaustive process, but this is where it all comes together. This is where the fun begins, because now you have the keys to the home. So you go to a location, could be your home, could be the attorney's office, could be the title company's office, and you sign some paperwork, and then the loan company or the financer funds that loan, meaning that they disperse the funds to the title company, and then the title company pays everybody that's going to get paid in the transaction. They pay the mortgage company. Let me rephrase. They pay off the lien on the previous property with the money that you've gotten from your mortgage company. They provide payment to the seller if there's an overage. They provide payment to the real estate agents if that was part of the negotiations. They make payment to the mortgage company if the mortgage company was earning compensation through the process. They reconcile the funds and they pay everybody. And then they do what's called a transfer of title and recording of the transfer. And that's how that all works. Now, I made it sound like a very simple process at closing, but there's a lot of moving parts and pieces there. So your title agent, your closing attorney, whoever that might be, they have a lot on their hands because they're facilitating multiple transactions within that home buying transaction. Multiple people are looking to get payment and to be made whole, and they are responsible for that, and they are experts at doing that. So that's something else that you want to talk with your real estate agent about, is the real estate attorney, or pardon, the title attorney or the real estate closing company. Find out more about their success. Find out more about how that looks in terms of buying the home. So that is our conversation today in a nutshell. I want to thank you for joining us, and I want to bring to your attention that you can scan this QR code and set up a time to chat with us here at ShorePoint Mortgage. If you have any additional questions that we didn't get a chance to answer today, or if you're ready to get started and you want to look at becoming a homeowner, give us a call, set up some time with us, text us, email us. We're happy to help. That's what we're here for. All right, everybody. Thanks so much for joining us today. I hope that you have had a great day, and that concludes our conversation. Make it a great day.